Advanced Tiger getting a little creative here, asking, is it worth increasing state withholding to get the full $40,000 SALT deduction versus the head of household standard deduction? Made a whole video explaining the new increase of the SALT cap to $40,000 under the One Big Beautiful Bill Act. Link to that video at the top of the screen. I would have to withhold about $2,000 per month in state withholding to reach $40,000 by the end of the year. Okay, I'm recording this video in August 2025. Bros, Advanced Tiger says would have to withhold $2,000 per month in state taxes to reach $40K by the end of the year. So how many months is that? August, September, October, November, December. So he's saying he has to withhold an additional $10,000 in state withholding. So 2,000 times 5 is $10,000, 5 months from August through December, in order to hit 40K. I'm assuming, Advanced Tiger, that you don't actually owe $40,000 of state income taxes. You actually only owe $30,000 of state income taxes for the year, which is what your withholding would be if you don't bump it up to 2,000, right? I'm assuming you need 2,000 per month more is what you're saying here. You have to withhold about 2,000 per month more, right? Let's just go with that. And of course, property taxes count towards SALT too, but I'm assuming you don't have that. But here's the thing: whatever you withhold, in addition to what you actually owe for state income taxes for 2025, you're going to get a refund for, right? Right? Let's say your actual state income tax liability for 2025 is $30,000. Okay. But in 2025, let's say you got $40,000 withheld, right? Yeah, you can take that $40,000 as a deduction on your 2025 Schedule A, right, when you file your 2025 return. But what happens when you file your 2026 return? Or, well, what's gonna happen when you, first of all, what's gonna happen after you file your 2025 return, right, in April 2026? Well, the state is gonna send you a refund check for that $10,000 overpayment, right, that you elected to pay in through your income tax withholding, an extra $2,000 a month from August through December 2025. So you're going to get a $10,000 refund check. In what year are you going to get that refund check? In 2026. And then what's going to be issued to you in 2027, January? A 1099-G from your state saying we paid you a $10,000 state tax refund in 2026. Now, those 1099-Gs for state income tax refunds are not always taxable. They're only taxable to the extent that you got a tax benefit for that refunded amount. Okay? It's called the tax benefit rule. And the question is for you, dear commenter, did you receive a tax benefit for that $10,000 amount on the 1099-G? The answer is yes, because you took it as an itemized deduction on your 2025 tax return, right? So what are you going to have to do with that $10,000 state tax refund reported to you on 1099-G on your 2026 tax return? You're going to have to put that on Schedule 1, taxable refunds, credits or offsets of state and local income taxes. Okay, I don't know why I can't put a 10,000 there, but that's what you would do, and that would increase your taxable income for 2026. Okay, so yeah, you can do that and get that deduction for 2025, but you're just going to pick up that excess, whatever you get refunded from the state to you, on your 2026 tax return, right? See how that works? Now, there may be some arbitrage things you're thinking about here, right? With rates differential, maybe you're going to be in a higher tax rate in 2025 than in 2026. Okay, so there could be kind of some strategy there, but assuming your strategy is not all that super sophisticated, this just simply sounds like probably a waste of time and giving disrupting your cash flow, because that extra $2,000 a month you could use to pay down debt, you could use to invest, blah blah blah, right? So probably not the best use of your cash flow, in my opinion, especially because due to the tax benefit rule, you're just gonna have to pick that excess amount, whatever's refunded to you back in income, for 2026, right? So anyway, Those are my thoughts. The tax benefit rule, taxability of state tax refunds. Sometimes those calculations can get really fun when there's kind of a combination of estimated tax payments and extension payments and wage withholding. But that's why we're here. All right, folks. Like I said, I'm Logan Alec. I am a CPA. I own Choice Tax Relief. We help folks who owe the IRS or their state at least $10,000 in back tax debt. We also help folks who have multiple years of unfiled tax returns. We get those folks discreetly back in compliance. If any of those situations sound like you qualify for a free consultation with us here at Choice Tax Relief. Give us a call, 866-8000-TAX. That's 866-8000-829. Or you can go to choicetaxrelief.com, fill out the form on the website. We will reach out to you. I also have some other videos here on the left-hand side of the screen for your education and enjoyment. Thanks so much for watching, everybody. See you in the next video. Bye-bye.